So here's a trade that I made today. Today is Monday. I did my regular SPY put credit spread 30 days out. So here it is, June 3rd, SPY, 255 short strike, 250 long strike. Collected, I believe, 78 cents. In fact, if I go to orders, executed, I should see it here, 78 cents. Yeah, I did one contract, so that's 100 shares, so that's $78. Collected $78 for this trade here. The trade is not over yet, of course. It expires June 3rd, but my plan, of course, is to close it as soon as I have a chance to close it for 50% profit. And for me to keep the full credit of $78, SPY would have to trade above 255 come June 3rd. So compared to current price of the SPY, which is 283, I think 255 is pretty safe, or has a good chance at least. And the way I would close the trade is simply create an order that buys back the spread as a whole for 50% of what I collected, so for about $39. But first I have to make sure that my positions are grouped by strategy, not by position but by strategy, and then I can see my position as a spread. I can click create order, and then the order entry window updates automatically gives me the closing entry. So as you can see, the -1 here means that I sold the 255 put, but the order entry window gives me buy the 255 because it's giving me the closing entry. So if I sold something, I have to buy it back to close it. And if I bought something, so in this case I bought the 250 put, I have to sell it to close it. So sell it to close it, sell the 250 put. And right now I can already do it for about 65 cents, maybe 66 cents. And so that shows me a small profit already for the day, because when I did this trade, the SPY was trading at 280 and the SPY closed at 283. So that's why it's showing me a small profit. So the way this trade makes profit is, like I said, the SPY has to stay above 255. But as we get closer to expiration, time goes by. And if the SPY stays at the same range or stays above 255 or even goes higher, then I can close the trade earlier. I don't have to wait till expiration. I can close it for less than what I collected to open the trade. So I've got 4 SPY put spreads, as you could see here, and I already have the closing orders for them. I place a good till cancel order so that they close automatically. They don't have to be necessarily on the computer watching the markets. And you could see that the 255 short strike, the June 3rd expiration that I sold today, I've got an order to close it for $39 or 39 cents. So how do I place this SPY put credit spread in Questrade? Just go to options, look up the ticker, and then I go to vertical, make sure I choose vertical, and then I choose the expiration. I like to play with 30 days, and then I click anywhere on the put side, and then the order entry window updates. I choose my strikes. The way I choose my strike is I look at the money strike. So if the SPY is trading at 283, I will look at the 283 strike, see what it's trading at. It's trading at $10, and then I will do the same thing for the call side. It's trading at $10 as well. I will add them up. That gives me $20. So the strike that I will choose will be $20 lower than the current market price. So I would choose a strike of, for example, in this situation, I would choose a strike of 263 for the short strike, and then my long strike would be 257, would be 258, so that I can have a 5-point wide spread. In this case, 258 doesn't exist. So what I'll probably do is maybe just go to the 255 strike, and then I'll go to the 260 short strike. So I'll just go lower. It doesn't matter, makes the trade even safer. I'll be collecting less premium, but it makes the trade safer. So make sure I'm on the put side, and I would be collecting somewhere in between 72 and 86 cents to open the trade. So why do I place these trades on the SPY? It's because I know that there is a 65% chance that if you look at SPY on a given day, so if you look at SPY today, there's a 65% chance that 30 days later from today, SPY is trading at the same price or higher. So there's a 65% chance that the SPY is trading at the same price or higher 30 days from today. So if I sell a put spread that's at 255, so it's not even at the same price as the current market price, I'm selling a put spread at 255. So I'm selling much lower. 255 divided by 280 gives me 91%. So I'm selling 9% lower than the current market price. So what are the probabilities or the chances that 30 days later the SPY is trading above a strike that is 9% lower than the current market price? So that probability is going to be higher than 65%. It's definitely going to be higher than 80%. So because of that high probability, I make these SPY put spreads every Monday, Wednesday, Friday, and I just close them at 50% whenever I can. In fact, for the past maybe 4 weeks, I've closed a bunch of put spreads for 50% profit because the market has been going up. So that also helps. So if you look at this chart over here, this section over here, if I had done put spreads as of March, they would be all winners. All my put spreads on the SPY as of March 13 would be all winners. Obviously, put spreads starting from here, February 5th, some of them would be big losers because there was just no way of managing those put spreads, because as soon as the market price drops below the short strike, it wasn't coming back anytime soon. But starting from here, they would become winners because, as you could see, the market just started to go up again. So now I'm selling over here. I don't know what's coming next. I don't know if the market's going to go up or if the market's going to go down. I don't know. But what I do know is, based on historical data, there's a 65% chance that 30 days later, the market is trading above the current market price or higher. And once I get enough capital in my account, instead of doing one contract, I could do several contracts. I could do 2 contracts. I could do 10 contracts. Now, what's the return on capital on this type of trade? So if I close this trade for 50% and I make a $39 profit, $39, the capital required on this trade is $422. So I would make a 9.2% return depending on how much time I close the trade in. Sometimes I close it in a week. Sometimes I close it in 2 weeks. Sometimes I have to hold it till expiration. It's rare though that I hold it till expiration. I usually close it before expiration. Now I had a short strike of 275 on the SPY. Today it almost got tested because the SPY dropped, I believe, to 279.13. I thought the 275 short strike would get tested today, and I was getting ready to sell a call spread against it in the case that it got tested. So if this short put spread got tested, what I would have done is I would have sold a call spread against it. The way I would have done it is simply just click create order. I would then change this to call, and then I would choose a strike obviously higher. A strike that, if I'm selling the call, that means I don't want the stock to be trading above that price come expiration. So let's say I think the SPY is not going to trade above 305, and I'll just pick 305, and I want the same width of the spread. So here I've got 5 point wide, so 275 and 270, and I'll do the same thing then. 305 plus 5 is 310, so 310 long strike. So I'm selling the 305 call, buying the 310, and I could have collected $38 by doing that today. But I would have only done that if this strike got tested. It was close, but it didn't get tested, luckily, and a good thing I didn't, because the market decided to move even higher. And let's say the SPY did continue to drop below 275, and this 38-cent call spread becomes even lower, then I'll just bring the call spread closer to my 275 strike. I'll go to 300, 305, and then I'll go to 295, 300, then I'll go to 290, 295. Depends on how fast the SPY is dropping as well. And it gives me a chance to hold till expiration. For me, in the case where the SPY does come back up above 275, so this whole trade becomes a winner. And in the case that the SPY does not come back above 275, well, at least I collected some free credits, some free premiums by selling call spreads. And instead of having a max loss of, let's say, $400 when I initially opened the trade, my max loss is then reduced to maybe $100 or $200. Depending on how much I collect from the call spreads as the SPY is dropping. So I just wanted to explain my trade today. So if you have any questions, don't hesitate to leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use one of my referral codes below to get either $50 in free trades or up to $250 cash back, depending on your deposit. Thanks for watching.